Thanks, everybody. Welcome, and really happy to have you here at our Harmonic Pattern Collection software, the foundation course. And today we're going to get into the finer points of harmonic pattern identification. And this is essential for everything that we want to do going forward. Can't emphasize enough the level that is required really to get to this point of understanding beyond the pattern. And that's essential for me. Again, I think it's everything that starts with essentially a first principle thinking with harmonic patterns. And when I really sat down and did my work and kind of unlocked the combinations and just identification facts, for me, I remember literally stopping myself in my trading and assessing kind of a first principles concept of, because I had been going through so many things that were not working for me, that I knew that a technical based, measurement based strategy was where it was at. But I still really was looking for an understanding of price movement. And that got me thinking about, okay, markets are movements, markets are vibrations, markets are frequencies. I've talked about this before, and there's videos actually in the gold member section that explain some of that, really kind of the subject matter of natural laws and the physics behind frequencies. The same thing is going on here in the markets, and I can't stress that enough of how that will affect your thinking, because everything that you need to do has to remove yourself from the outside influences. We need to get on an exclusive measurement basis. That's going to destroy, if we are in a measurement basis framework and mindset, that destroys all other ancillary outside issues that may arise during the decision making process. And that's key. That awareness of what we're doing here, it's not happening all the time, as you know, but it happens a lot. And the software and what we do is to isolate those situations. That's our trading plan. We are looking to identify those natural patterns, those patterns from natural law. I've talked about the Fibonacci examples before, and again, I'm not going to get into that, but check out that introductory material on how frequently the harmonic ratios and the structural repetitive patterns appear in nature. I like to call it market phyllotaxis. Phyllotaxis is the growth patterns in plants that present the same proportions that we look at in the markets. So that's, really, once I cracked that, and there were people doing that before, there are people applying that with Elliott Wave. I found that stuff interesting, but for me, it was about cycles. For me, it was about unlocking that. What is harmonic? Okay, what are these? How do these movements relate to each other? We know the market can be random, can be crazy, but we also know within that randomness, there are repetitive patterns. Those are the harmonic patterns. That's our signal. That's the structural signal. And today we're going to look at what are those markers that give us the sign that it's actually a harmonic structure. So that's really critical. When we go to price action, because a lot of what I started with in price action looked at these natural laws, the frequency. I looked at guys like J.M. Hurst, Arthur Merrill. You go back, of course, Elliott Wave, R.N. Elliott. All of those guys talked about the frequency of movements. We focus on M and W formations. Those are our harmonic fluctuations of price waves. Okay, but that gives us, that's the difference, where our waves, our M and W waves, even some of the other waves, that other formations we've talked about, are different than the basic 3-5-way structure. Okay, and it's critical, but it's still a unique entity, and it respects what any methodology is going to look at in price action. We're looking to identify those repetitive conditions, and that's what a pattern is. So, measured pattern, it represents a group of collective trades, and that gets into really, again, my thought about thinking in this exclusive framework, this measurement framework. I don't care about news, presidential elections, who's going to be in the White House, or it doesn't matter. What we're measuring are movements of supply demand in the market, and we're looking at unique subsets of data, the patterns, the individual trades that make up each pattern is exactly what we're assessing. That's the framework. We're looking at a group of trades that comprise a unique harmonic measurement that represents a sign, a signal. And we look at that as like a microprocess, meaning the pattern in its consolidation goes up and down, back and forth. But that's significant when it adheres to the rules that we've talked about. And these are what I call market mechanisms. I'm going to refer to this a lot, of different market mechanisms, because I really believe that we go from point to point, pattern completion point to target to retest. And these are all distinctive mechanisms that once we identify them, and once I highlight which ones to focus on, then it's going to go on like a light bulb. Like, okay, there's a completed pattern with a confirmation. That is a market mechanism. The pattern is a structural mechanism. The indicator, the confirmation, is a bias or a directional confirmation. These are all market mechanisms created by individual trades. So we'll talk about that tomorrow more when we get into the executions and the execution strategies. But this is essential to everything that we do, because look, a measured pattern that gives us that group of trades, that's a definable history with a unique characteristics, traits. Okay, and we look for that, and that's what we identify. We also bring in things such as the concept of a central limit theorem, meaning we have a minimum amount of bars that, not only, as many of you know, the 30 bar rule, 30 individual price bars that have to comprise a pattern. Again, another example of how we look at these individual trades collectively to define that cycle. And that's where, once we identify it, listen, there is an expected reaction. Most of you are aware of the type 1 reaction, and you also have seen, if you're here, you probably know how accurate harmonic patterns can be. They're remarkably accurate. But that is all based on the correct measurements that the software provides, and then taking action based on that expected move. So that's really the essential part of what we'll get into tomorrow, of what are those expectations and how do we capitalize on them? Because again, we're looking at little processes that have a start and finish. So again, it's really about looking at the harmonic phenomenon, okay, and assessing when that harmonic phenomenon is really taking shape, has completed, and then has the necessary elements that the market is showing us to define an opportunity. So it's really comes down to where, in terms of our learning curve, that we're all here to understand that harmonic phenomenon. Most of you are aware of the patterns. You know we've got harmonic patterns. You know what they can do. Now it's really a matter of breaking it down, recognizing the price action at the completion point. That's another micro behavioral process, literally that point immediately after the pattern completes. Now we look at each pattern, we define these differently, and they are each unique subsets, but we treat the pattern completion the same way. We move from differentiating a BAT versus a Gartley to going from, let's distinguish the relative environment. That's a pattern. It's a pattern. It completed. Okay, what's going on within that framework of the pattern, whatever pattern it is? And let's distinguish the relative events, the confirmation strategies, even the individual price action, because we combine that with the predictive framework. That gets us an idea of where the market's going. What's it going to do? Really, really essential, because all of us are here right now. Okay, we know that harmonic patterns are a signal. I'll say philosopher's stone, meaning they give us a predictive future to look forward to. Now, our desire as traders, we have to convert our desire as trading to a conceptualized idea, and we're committing whatever energy that is. We're following a methodology. We need a methodology. We need a way to understand how to take action at what price level. And that's based on our framework. And we stick with all of our decisions, all of our actions are based on this framework because that controls the behavior, not to get crazy, random executions. Oh, I think it's going to go up. Let's just buy. We got to have a reason to buy. But if we stick to that framework, that's what gets us not only to turning all of this desire of wanting to trade, wanting to make money, wanting to be successful into a trading plan with guidelines that really tells us where we are relative to the market at all times. And that is another important step. On a larger level, a lot of us we need time to learn. We need time. If you're new to harmonic patterns, I strongly encourage you to take a couple of weeks and really get down with what you need to understand and utilize the resources. Take times looking at the software and expose yourself to the patterns and to the relationships that I'm about to show you. Because the ability to profit from harmonic patterns really comes down to the skill and your skill navigating the parameters. So this is what we're trying to do. I'll call it harmonic pattern alchemy. All right, we are determining the harmonic phenomenon. We're differentiating the structural metrics. We're distinguishing that relative environment. And then we're dictating our own actions based upon how we assess this framework. That's how we convert clicking the mouse, clicking the button from a profitable trade to a losing trade. That is absolutely what the focus of converting that energy into a successful endeavor. Now, if we look at any market, any trade, where's the opportunity here? Okay, how do we assess this? How do we even look at this? And if we lay some patterns on top of it, it gets a lot clearer, doesn't it? I mean, it's really, a lot of you are we're in the prior chart. And now we come to where we look at the patterns generated. One, we can rely on what the signals are generating. So no more making mistakes by measuring patterns improperly. I'm going to show a couple of strategies today that will probably highlight why my patterns are generating from different points than you may have learned from someone else. And it's really important because there are distinctions that are incredibly significant that define whether or not it's a true zone. So let's take a look at what the process is. Let's take a look at how we should be thinking about this in our brain, because as many of you know, how we look at these phases and how we look at patterns, how the framework unfolds, has different time implications. And I've showed this before, and a quick review though, to understand that we're assessing identification strategies. What is the point? The point is to get us to the completion of a pattern to then move into that execution framework. But we have to break it up. Start with trade identification. We want to identify primary patterns. We want to follow what the software generate matches. But all of our key important focus is as we go into this D point and assessing the zone, but understanding that our time allowed and our preparation required it's going to take longer for this to develop, and the execution window is going to be much shorter than the other two phases of the process. And that's important because a lot of times people don't realize simply they need to be prepared, and they're not prepared. That's why the software gives us the advantage. It's why it serves up the matches left and right and facilitates this process. So we want to take a look at that relative to, say, our patterns here of understanding how these M and W patterns, the deep crabs here, come together as they're forming, of course, it's going to take a longer period of time. In case this one here in Bitcoin, I just updated this one. This is from earlier today, okay, of how quick that CD leg came to completion. And then how many bars in here literally did we spend of the total pattern? Because this is usually going to be a fraction. The execution phase literally will be maybe 10% of the total time of the pattern. So if your pattern is 50, 60 bars, you might be in that zone for about 5 or 6 bars tops. There'll be plenty of time to execute. But in terms of number of bars, we got to think of it that way. That should be doing certain things. If it's reversing, stabilizing, having certain characteristics, okay, they will be exhibited immediately thereafter. So this is a part of that process, but we understand that, look, identification is all about getting prepared before the pattern so that we can capture this execution window. And then the management will get into that on the third session, but that has a whole bunch of other rules that we will apply that takes even longer. Again, same thing for the bearish situations here where we are usually in the development phase quite longer. Again, depending on the pattern formation, we'll talk about this again in our next session of how these take shape for execution purposes. But really important that this CD leg preparation phase is really essential to be in front of that. We want to be identifying this structure as it's hitting the zone or completing the terminal bar, and be prepared as it completes terminal bar. Okay, we know we're very close to some type of action. So let's get into the framework, what we need to identify with the process, because today I'm going to move from terminal bar into some specific strategies and expectations of what we need to look for in this area of the zone. So the framework really is all about encompassing the pattern, the M, the W formations inside of a defined realm, inside of defined limits. And we'll look at that in a second here of exact price levels. Okay, because that's the other aspect, that if you're executing any trade and you don't have an idea of your profit target, you don't have an idea of what the entry range should be, okay, you need to step back and take a look at how you're defining your opportunity and then measuring risk reward and measuring also profit objectives. So we will look at that. We will look at some time considerations. Also, everything that we do is within the reaction reversal framework. We got to be thinking always reaction is our minimum response. That's our minimum, and we will get into those measurements of what are minimum reaction levels that we want to consider. The reversal dynamics that I've talked about, especially in the type 2 larger opportunities, they will come beyond the reaction strategies. So most of what we will look at today, and most of what I want everyone thinking about, is how to assess all price movements as reactions first. They will unveil themselves as reversals with more evidence and other confirmation strategies. But again, if we treat everything as a reaction, it should do what it should do at the numbers. Also, that establishes kind of a fail-safe endpoint where if we define the pattern, we have confirmation, then we know that there's a limited scope, a limited range that we can allow even in a losing situation. So we want to look at that, and within the M and W frameworks, okay, the importance of our measurements and that every level is measured, okay, comes from the fact that these same patterns repeat in all kinds of frequency waves. So these relationships that we're looking at are the same ones that repeat in nature. It is a structural framework of reactive framework versus a larger reversal framework. But the key is that they all possess the necessary relationships and are relatable. So our measurements, again, gets back to just establishing and reaffirming that all decisions come from these measurements. And that's because of a concept called the principle of harmonicity. I've mentioned that a long time ago, but that comes from J.M. Hurst about 50 years ago when he released his cycles course. And he talked about how, and his analysis was showing how price waves are related to each other. He was looking at a more one-to-one approach, but these price actions, the price formations, the price legs related to each other, was just in terms of that discovery, was saying, hey, that's a place to be looking for projections, price levels. I'll look at that prior price leg and measure it to what future possibility could be. So within our M and W formations, okay, within that structure, we just need to trace it out where we are. So this M and W formation, again, we need to be thinking in M and Ws. We're going to look at their basic measurements here, but everything that we do when we swing from point to point is based on M and W minimum formation expectations. We have that M, okay? We have another W. I'm just going to zip through these. Another M, another W, another M. Now there's our bullish structure. That's just basic M formation sketched out. But again, I want to highlight why this is so essential. And some people overlook it, the fact that we have to have our initial point at an extreme high, the B point. That has to be, depending on where that lies, that B point. We'll get into that in a second. Many of you know, but I'm going to show you some measurement strategies we can use beyond that B point to help further give us an idea of what we're looking at. There's a bearish W, or bullish bearish structure, is an M bullish structure. There's a W bearish extension structure. Now, I know this is very basic, but let's look at really within this 5-point framework why these minimum constraints work. Because that structural formation, those M's, those W's, give us those metrics. Now, within the non-M and W formations, like Shark and 5-0, we'll talk about them on our third session. I want to focus just on the M and W's today. We can then relate those M and W formations to those other patterns, but again, if we know what we're looking at, an M or a W or what type, it's really easy then to differentiate and separate the Sharks and the 5-0s. So let's look at this B point. This was actually probably the #1 breakthrough discovery that I put out. That, this was 1998, so we're talking 20 plus years ago. The fact that these M and W formations, yes, there were Elliott wave guys talking about an ABC correction, other people doing XABCD, but no rules or anything around it. And as soon as I postulated the fact that, hey, I think if we can define a clear XA level and we know where this B point is in this M structure, no matter where that is, then we've got something. Because as we're coming down into this final leg, once we violate that midpoint and we get to about here, well, we've got 4 or 5 points. We know what we're dealing with. That's the key. So the B point location, again, that differentiates our location, our direction. It tells us the B point is going to give us a lot of clues of how far something may stretch to and what we're really dealing with. We also, as I said, we want to assign those XABCD points because those set up then the ABCD that fits best. That's also an important point. If you know the proper B point, that midpoint for your M or W, then we can make the proper XA extension level assessment and then utilize the best ABCD structure that fits into that zone. So all of those metrics, they define, most of you know, the potential reversal zone. It's incredible. I've heard people call this price completion zone, anything zone. It's potential reversal zone. That was defined in that first book I put out, Harmonic Trader, in '98. That's the zone that comes from the measurements. That sets us up for everything we need to consider. Now, again, here's classic structure of a crab structure. If we look at this M formation, we see it be a point at a 618, and we're getting into our fourth leg. We're 4 of 5 legs as we're coming down. We're targeting a 1618. Okay, I know many of you understand this, but in a minute here, I'm going to get into a couple of examples where we can project it out, and I'll show you where it's clear so you know what you're dealing with. You know if it's going to be a 1618 extension, or if it's going to be just a 113, or if it's going to absolutely collapse. Let's take a look at an example here. Here's a crab pattern. Okay, this is NASDAQ 5-minute futures. Really ideal crab pattern. We see this stuff every day, folks, every day. Ideal M formation over here with everything that you want to see. Okay, a nice XA leg that sets us up for the measurements, and essentially the 618 at that B point dictates a 1618 breakdown. And here's exactly where I'm talking about. There's your B point, and as we're violating and coming into a CD leg, and you crack your B point there, okay, it's literally at that point where we're assessing a 1618 much lower. You know, you're talking 70, 80 lower, 100 lower from that breakdown point. If we know that this whole structure, this M structure early, is giving us a 1618, are you buying? No. If anything, we could look for opportunities in there. Again, we'll get into that tomorrow. What I want everyone to focus on is, one, that structure, and project out that structure. But whenever you're projecting out that structure, I mean, one, the software will do it for you. But if we want to understand, and we're looking at a market, just price action in general, we have to be grabbing off of critical highs and lows, and then measure up that B point. And wherever that B point is, that dictates where it'll go. If that B point was a 786, we would look for a butterfly at a much shallower level. So again, look at these M and W structural measures. That defines the PRZ. So the B point triggers the primary XA measurement, and on that we build everything from there. Essential. Why that XA measurement is so critical. That PRZ, that zone, potential reversal zone, then gets us a terminal bar. And the terminal bar is where we start with today. Terminal bar is everything we want to jump to. I want you guys thinking terminal bar. I want you to move away from patterns themselves, and even away from the zone. We can look at PRZ, and it's helpful, and we'll talk about that tomorrow when we look at failed signals in an execution zone. But the terminal bar, that's the completion point. If you wanted one single bar to define any pattern, we have it. And it's essentially in that terminal bar really where the real process begins, or at least it does now because we have the software. Years past, we would spend hours, I would spend hours a day on the identification, trying to draw a measure. Now we have it literally to where we get to a sun icon, this one sun icon that generates, that's the terminal bar. Okay, this is the point of the completion point for our crab pattern on that 5-minute example. Couple things to note. Okay, here's our zone at the 1618. 1618 all the way at 521. All right, and yes, that's ideal, and that's a valid potential reversal zone. Now, there's a lot we can glean from that single bar. Okay, first of all, what's happening with this bar at the close? That's the first way that I look at it. Did the bar hit all the numbers? Yes. Okay, what's the extreme of this bar in terms of a bullishness? The low point was 12,498. Now, it comes up and it jumps up and it closes at around 510. That's 12 points off the low. But from a procedural perspective, okay, the process of the identification, the pattern forming the signal completes here, but our execution does not begin until the close of that bar. And then we jump into the next bar. All right, so we don't even assess the pattern complete until the close of the bar again, and that is the terminal bar. We will look at this, and especially tomorrow with execution, we will look at that entire terminal bar range and how we look at things inside of that range, because here's our PRZ, absolutely. But the terminal bar is the low end, that's the kind of the overspill from the real world trading. That's the ideal measurement. That's the harmonic level, sure. But we can learn a lot of what's happening in that zone and then just start to make assumptions of what's going to happen in here. Because once that terminal bar completes, we now want to go into looking for a specific set of conditions. And that's the other aspect. I think a lot of people have been looking at patterns. Thanks, guys. I got it. We're back now. Thanks, everybody. No, we got it. Are we back? We should be back. Great. So we're at this zone, and a lot of you have seen me do this in our gold member sessions where we get to the completion point and then we start looking. And this is the normal, absolutely the normal expectation. You're looking at the first time a pattern's completed. We'll talk about that tomorrow. But the normal expectation is let the thing complete. Let that harmonic pattern complete. Let that terminal bar, let that sun icon shine for a little bit, if you like to think about it that way. Because then it sets us up here where we've got the window. And the window a lot of times is the single price bar range. So if your execution is at or just below between terminal bar range and the low of the zone, you're in a pretty good spot. You're positioning yourself quite well. The other thing is that beyond the terminal bar, if we are in a 3, 5, 8 bar window, that's okay. In fact, our best reversals are coming with a small consolidation. So let's look at that. Because at that terminal bar, all of our decisions they start there. And again, it's the sun icon. A lot of what I'm doing and will do tomorrow in the execution strategies is I've reduced it down to just, hey, recognize the sun, the triangle, and then I'll show you the individual, how I look at the individual bars in that zone. And then it's all about what happens after. Again, what happens in the zone stays in that zone, meaning that essential harmonic level is critical. And if you measure it properly, correctly, you are going to see a lot of unique conditions and confirmation line up. Again, come into a zone, we look at that as it hits the level, and we're assessing this total price bar range. Now, here's the thing is that, again, we expect a couple of bars after, and we got that in this setup. We have that sun icon. We have 3 bars here, consolidation, and we come back and we have a retest. And so this is something that, again, I don't know if I've ever really put it out in this way before, but this is the normal experience, what the ideal unfolding of a pattern completion. Terminal bar completes, we come back and we retest that low or high if it's bearish, but we retest the terminal bar extreme. A lot of times that's on the first bar, or it could be within the first 5. But that is a critical structural understanding that when we look at terminal bar, we wait and looking for confirmation, yes, but we're also looking for that little check back. And we look at that right after it has been established. So again, we're in there in the PRZ, we look for that individual bar. Also, is it bullish or bearish? Is the terminal bar candle bearish or bullish? When is the first time we see a bullish or bearish candle? Then the other thing within that window, the 1, 3, 5, 10, 30 window, again, we'll highlight our indicator condition and we'll look at time frames. Most of that we'll do tomorrow, but what we want to look at is that really in that terminal bar plus 1, 3, 5, that's what establishes the possibility for a reaction. Again, within those first few bars. We'll talk about tomorrow why we expect every reaction to take 30 bars. And I'll line it up. We'll number them one by one, 1 to 30. But we are at that point of +1, and we see something agree with the pattern, and it's retesting the terminal bar. That's when we know we have a sign of a harmonic response. This is like one of those micro processes, okay, where the pattern completes and then it has that last little retest ditch consolidation. And this happens more times than not. And that little retest will help you not only give you the patience to wait for the pattern to complete, but optimize our executions. This is a structural strategy. I haven't really outlined or highlighted before that everyone should start looking for it. I call it the terminal bar check back. I've talked about HSI check back and other kind of checkbacks. The critical aspect is understanding that at this point, we then see some very distinct processes unfold. The retest of terminal bar is one of the primary structural events before the reaction unfolds. So when we're at that point, and if we understand that that happens, okay, how are we going to look at this? We understand that there's a terminal bar. It takes several bars for a pattern to unfold. Well, we got to recognize and look at the pattern. So we assess and recognize terminal bar. Then we're looking at the price action. Then we will, and especially tomorrow, we will focus on, is it the first time or second time? Again, all of these build to establish the proper expectations. We'll look tomorrow again at probably 2 or 3 specific indicator strategies and also look at trend and time frames. These are all to build what we should expect inside that window after the terminal bar, or especially a terminal bar check back. So if we're at the terminal bar check back here and we're at the completion point, okay, as the pattern's unfolding, really easy to think, oh, we missed the trade, it took off. But if we know there should be a check back and we're maybe 2 or 3 bars inside of this, inside of that completion point, we're looking for that retest. There's other things we're looking for, but this consolidation phase is an expected sign. There should be an expected sign, an expected kind of final consolidation, stabilization before the reaction takes place. So if we see that, recognize it for what it is. And in most cases, what this means is that you don't miss out on a trade. You're usually going to have plenty of time to capitalize on the trade. Again, a lot of people find themselves executing after the fact, or they get a little bounce and then they jump in late. Maybe instead of jumping in at this, the 500 level or the 12,500 level, they jump in after the fact of the zone. What I'm trying to emphasize is even on your type 1 trades, we're always going to have plenty of time. So what else do we want to see inside of this terminal bar? Because the other aspect that should be happening, that if it's not there, we simply don't have a trade. But we need to have specific conditions unfolding. Many of you know I do a lot of work with relative strength, and I have taken that to the next level with harmonic strength index and also amplified relative strength. These are the three primary indicators that are featured on the platform. I will do a quick review of them tomorrow on how we look at each of those. We'll look at the exact, not only the tools, but we're going to look at the scenarios. Okay, we'll look at what needs to be there. Is there simple confirmation? Do we have RSI BAM confirmation? Do we have HSI, harmonic strength index check back confirmation? Amplified RSI BAM, or do we have the double or triple confirmation? Essentially what we're looking for is 1, 2, or 3 of these formations to give us an enhanced value to support the pattern. What does that mean? That means if we have some kind of confirmation, it doesn't matter what it is, we have a greater expectation for at least a reaction. That's the key. Again, recognizing, identifying what confirmation is happening there. That is the key. Do you have any confirmation? That's a simple question to ask yourself. You're looking at the pattern. Here's the pattern. Here's the NASDAQ, okay? We're looking at extreme indicator confirmation. Well, do our indicators at the terminal bar, are they at the extreme that agrees with the pattern? In this instance, yes. In a lot of instances, no. And if you don't have at least one confirmation value, you don't have an opportunity. You don't have an executable trade. That's also, I would say, a new rule that you should be sticking in your hat. If you don't have some kind of extreme indicator scenario, in this case, there's standard RSI, here's harmonic strength index and amplified. All of that, 1, 2, 3, that's actually the triple confirmation I was just referring to. Again, all of this we talk about tomorrow. We'll talk about what are the confirmations that give us, 1, a higher degree of confidence that we'll get at least a reaction, and then 2, what's happening here to tell us or give us the clue that we might get something larger from this pattern. It still fits in the type 1, type 2 framework no matter what. But if we understand what's happening as this is hitting the zone, and that is the key. We want to see indicator confirmation as the price action's entering the zone. I mean, really, sometimes we see it a little bit it's too soon or maybe too late. Really, as the price action is hitting the zone, tell me what the indicators are doing. Are they down there? Are they in the extreme? Because if they're not, then you just leave it alone. You'll wait for that situation. Tomorrow, we'll look at some of those kind of wishy-washy situations that might leave you guessing. I'll show you what you need to look at so you know exactly which ones are actionable and which aren't. In this case, we will look at this tomorrow of how the harmonic pattern collection software generates those signals for us. For HSI, it's a pink arrow. For the relative strength RSI BAM or amplified RSI, when that green line stops, okay, for the bullish reading, or when the red line stops. Really important for me to simplify the signaling here. I know that a lot of you are aware of RSI, have studied RSI. I think it's great to know the details. But what I want to simplify for everyone is in terms of what we need to identify. We want to identify an opportunity. We need to identify the pattern, identify if it's the first time or the second, and do we have any variables in an extreme that link up with the zone? Those are immediate filters that then get us in a framework of understanding, okay, we have at least the possibility of a reaction. Tomorrow, and in our third session on management, I'm going to show some strategies of how we can gauge these structures out of the zone to basically manage the reaction. There are specific formations. There's W and M formations we'll look at in the indicator readings that tell us when we have real price construction occurring. A lot going on. So listen, today was really about getting started, and it was really about identifying the general strategies, the exact elements that comprise an actionable harmonic pattern. I can't stress that enough, is everything in this course is designed to take you from a harmonic pattern, which a lot of people are drawing harmonic patterns all over the place. Other people that are teaching my work with harmonic patterns aren't even doing it correctly. So it starts with the proper measurement. That's with the software. So for everybody that's in here, if you are not set up with the software yet, get with the software this afternoon. Check your email. All the information is on there, and it's on the website at harmonictrader.com. I want you to get set up because we're going to be talking about the indicator tools that we use: relative strength, harmonic strength index, amplified RSI, in our next 2 sessions. Really want to be aware of what's going on there. The other part, really, moving from today's session, is then getting your focus on all of your future trades. Everything you're looking at is to go to terminal bar and then focus on what's happening after terminal bar. What's happening in the few bars leading up to terminal bar, but in that zone, in that PRZ, in the terminal bar range. What's going on there? Because then if you can recognize, hey, I've got this, I've got a completed bearish divergence, I've got a completed extreme overbought signal, I have a bearish pattern. That's the way that we then think we're at an indicator extreme. I call them environmental extremes, and then we're at a structural extreme. When you get to those 2 extremes, okay, that then gives us the framework of looking for a reaction at a minimum. Tomorrow, again, we'll be all over that because we'll look at not only the simple, but we'll look at complex. We'll look at double confirmation, triple confirmation. Our last example was double confirmation. Now, the other part of this is that, again, identifying what's going on there is half the battle. Tomorrow, we're going to talk about expectations. So if I see one type of indicator formation versus another, how do I think? Always think reaction no matter what. I'm going to show everyone the indicator formation strategies that get us to the reversal, that show us where the larger moves can be. Now, again, all of this has to, and from a minimalistic standpoint, thinking reaction in every instance is a great way to really be, aggressive in your management and to be super disciplined. That's a big thing that I will hit upon tomorrow, of why the framework gives us the discipline. So if you've been kind of not being too disciplined in your trading and you're being a little wild and out of control, tomorrow we're going to get into the finer details of how you stay within the framework, because it's in that terminal bar. If I can get everybody to terminal bar, I can get you to the completion point of the pattern. I can walk you through the other 3 or 4 things that unfold from execution to from entry to exit. So again, we're going to look at that. We're going to look at RSI BAM. We'll look at HSI and XYZ, all the other stuff that is the harmonic evidence for those potentially larger developments. So a lot there. Tomorrow, again, we're going to get into all of that. We will look at more examples like this crab pattern, but this is the ideal framework, and this 5-minute structure it gives us, really everything that we want to see in an ideal formation. We will get tons of patterns, and I mean tons of patterns, that don't have the ideal confirmation that we're looking for, the ideal structure. Okay, stay away from them. We don't need to push it. We don't need to force any situation whatsoever. Again, tomorrow we get into those details, but as soon as we see the sun icon, and it doesn't matter what platform you're on, all right, the sun icon, that sun right there, is the first step into jumping into an actionable opportunity. Then tomorrow we'll look at when to get into that, the acceleration of that. Yeah, Thanks, Marcus. Let's take some questions here. I did say 9 a.m. tomorrow. That was a mistake. That should be 12 noon for tomorrow, please. 12 noon Eastern. Thanks, Marcus. I think that I meant that to be different. All right, let's get into a couple more here of looking at the PRZ. Again, we'll take these questions, but everything that we do, okay, again, and just to reaffirm, looking for that PRZ, absolute PRZ requirement. Identify the pattern, identify the terminal bar, and then just identify an extreme element. And then tomorrow, if we have those, if we have a pattern, we are at an overbought, oversold extreme, okay, then we can take the next couple of steps. Is it going to react? Is it going to reverse? And then we're going to go from there in terms of what we need to see to determine the overall indicator confirmation and actionable opportunity. So tomorrow, again, 12 noon, we'll be here. So let's go to a couple of quick questions. If you guys have some questions, put them in the chat box. And Bob asks, so how is the check back related to the harmonicity? Okay, that's a great question. So harmonicity, what is that? Harmonicity is the fact that we are and we can make assessments and predictive assessments based on our relative measurements. So if we're looking at, say, a crab pattern, okay, an ideal example of that was the crab pattern at a 618B point. That harmonicity can lead us to a 1618 XA extension. Now, with the check back, what that does is we're looking at the exact terminal bar, and then tomorrow we are going to do individual measurements on the terminal bar. So essentially, terminal bar will establish, that's going to give us an exact range in the zone. We'll look at that tomorrow. That terminal bar check back actually has a lot of great things going on with it. Thanks, Nitin. Appreciate it. What is the management when the sun appears before to complete the pattern? Well, the sun's not going to complete, Fernando, until the pattern has completed officially. So we're not doing anything until you see that sun icon. That's essential to understand. Let me see if I can go back to, yeah, let me get this and let me go to that slide and bring that up, because I think it's important to look at that. Until that sun icon, we'll go back to our last, here's our last example. And yep, let's look at that one. Hold on. Hold on. Sorry, guys. There you go. Let me go back to this. Where'd you go? Hold on, let me hit this out. All right, let me bring that example back up. Let's look at that. Okay, there you go. So your sun icon is not going to appear until it hits the zone and tests all the numbers. And so the point here is you don't have to even worry about it. Okay, wait for that sun icon to show up. And tomorrow we'll look at the screener as well. We'll look at trade examples from Harmonic Pattern Collection of how we can pinpoint and find terminal bars that have just completed. So don't ever think that the sun icon is gonna appear before the pattern. Next question. So you get confused when you're waiting for a type 2 retest, and another pattern forms in the previous zone? That's a great question. Tomorrow we're going to talk about first time, type 1, patterns completed, and second time, type 2 retest. All right, and the question is, well, sometimes another pattern forms in that secondary retest. Like in this instance, there's another pattern. You could say there's another pattern. There's kind of a bat pattern there, bat formation. Actually, it's probably Gartley a little bit better. We're still going to look at that in the type 1, type 2. If you have a smaller pattern on the retest, that's even better. That's actually what happened to Bitcoin on the weekly basis before it launched. We had 2 weekly patterns back to back. That's a great sign. And the fact that the patterns are forming should be a larger kind of sign that it's marking a specific price level. I mean, if you see multiple patterns, even in a consolidation zone, they're all bullish kind of at the same area, that's a great indicator of a true harmonic level. Hey, JT, how you doing? JT asks, does trade identification start from the XA to CD leg completion or just CD alone? It starts from the CD alone. So, and again, that is something else I see a lot of people doing, projecting patterns with maybe 3 of 5 legs. I only want to project when I've got 4 of the 5 legs established, and that's usually when the B point is exceeded. So I will never assume a pattern until we get past our B point. Yes, we could be getting close as we're getting down here, and there could be some other things going on, but by definition, okay, until we break that B point, we don't have a verified structure. But once we do, okay, then we can make our projections. So trade identification really does not start until that B point in the CD leg has been violated. So Alex, hey Alec, he's asking, what do the green and red lines mean for RSI? Those are where RSI BAM ends. Now, for our purposes and what I'm trying to simplify it, when that line stops, okay, you start looking. That's how I look. That's how I say. So if it's red right here, I start looking for a bearish pattern. It's green, show me a bullish pattern. Do we have a bearish pattern? Do we get one every time it completes? No. But we're looking for that when we do. And again, I'm going to direct your eyes to start focusing on these specific things that complete or at least show up in the program. In this instance, not only on regular RSI, but amplified, we have an RSI BAM, and I'll review that tomorrow in our next session tomorrow. But again, the important aspect from a signaling standpoint is that the green line stops right there. We start looking to the right of that green line, just the same way we start looking to the right of the terminal bar. But if you've got a couple of RSI BAMs completed, bullish, this is a bullish divergence, that reaffirms, that gives us greater evidence that that harmonic support zone has got something really behind it. That's the way to look at this. And again, I will highlight that a bit more tomorrow. But the green line is where that confirmation or divergence, the RSI BAM stops. That supports the pattern. Hey, Marcus. Can I ask that you use any future equity forex markets for most examples rather than Bitcoin? This is NASDAQ futures we're looking at. The Bitcoin chart, I think, was the first chart or second. This is NASDAQ futures. We're looking at this every day. And most of what I do is futures. I do a little forex. I've backed away because I'm more on stocks and options. So, but NASDAQ futures and S&P futures, absolutely. And I will do a lot of futures tomorrow in our next session and our final session. Next question, is there value seeing volume as the price bars, especially the seated D, just like RSI is confirming? Yeah, I mean, volume's great, but we're still within the framework. I think if you have a sufficient volume traded, okay, you're going to have a smooth market. Again, it's all about normal expectations. If you're extremely light market, you're still going to see harmonic patterns. It just, are you going to be able to get filled at those prices? We'll talk about that tomorrow. Someone asking about the Bitcoin chart. What do I predict for Bitcoin? Wow. Well, I think that's probably better. We can get into that on Monday of what we can expect from Bitcoin. But I did target 35,000. And then someone was asking last week, well, now what? We're at 40. And I said, well, we got to look for our first HSI signal. Again, tomorrow we will look at this sequence of execution because, yes, in Bitcoin we have a terminal bar, but we don't have any confirmation to signal an opportunity yet. And look what it's doing. It's blasting through. Another 1,000 points higher, and this will be a straight-on violation, straight out. So we'll look at that tomorrow because, again, HSI in the zone is our primary execution value. Jeff asks, if you have an HSI check back, or sorry, if you have a terminal bar that checks back, it's retest, would you take the trade? No. I want some kind of indicator value that links up. You will see a lot of reactions, Jeff, no doubt, especially crab patterns right at the 1618, okay, crab or deep crab zone. You'll see a lot of really sharp 3-5 bar reactions, maybe go up to target 1 and then come back down for a retest. Again, we'll talk about that in our next session and on our third session. But everything I'm doing has to include some kind of indicator value. The Friday, Jeff, the Friday, other Jeff, Friday, Saturday classes, 12 noon. All classes are 12 noon, folks. Our seminar sessions today, tomorrow, and Sunday, 12 noon Eastern. Hey, Claire. Oh, okay. I think I see what you guys are saying. Okay, so sometimes the D point, or what you'll see is you'll get the D point again where it's beyond the terminal bar. And the software will show the completed low sometimes. Now I understand what you're saying. Yeah, again, I think all of that gets answered if you focus your energies after the sun icon. Again, I think a lot of us exhaust ourselves waiting for the pattern to complete. Now what I want you to do is take that energy and put it on the terminal bar and tell me what's going on in here. Because if you've got confirmation factors with the pattern, we have a highest degree of probability for target 1 reaction. That's how to be thinking every time. And again, if we stay in those minimum constraints, it gets a lot easier to kind of understand how the framework's unfolding. How should we approach the area after the sun icon completes and starts to go up and then drops below the PRZ like this one? This one did it, Scotty, and that's a great one. We had it. We had a couple 3 bars going up, and then you had a quick retest of the terminal bar. That happens a lot. Okay, again, tomorrow we're going to get into how to read that. All right, because look at where we are with the indicators, at least where the sun icon is. You are deeply oversold. Okay, there you're still oversold there in HSI, and you're oversold there in regular RSI. Now you're probably pretty excited because look, your green line stops. That's where RSI BAM bullish divergence completes. There, and you're pretty close. But the expectation for the proper identification is that you're always going to have plenty of time. So even if you miss it, guys, you're never going to miss a trade. If you miss it, just let it go. Focus on the ones that give you these checkbacks and this confirmation. Because once that arrow appeared in the zone with HSI, and we will talk about that HSI checkback in detail tomorrow, but the fact that that's there, that sets us up for terminal bar checkback. That is one clue that we will get a terminal bar checkback. The other thing that I will highlight, especially in our management presentation, is do we have price construction? What is price construction? It is, do we have the price stabilizing each individual bar, agreeing with what the pattern is telling us? It's a bullish pattern. We should start seeing individual green candles that create and make up the stabilization, but we should see that also in our indicator readings. Most notably, we should see a W formation come out of the zone. Show me where, once we get out of here, where's the first place we can draw a W here? And it's about here on that breakout point, and that lines up with there. But look at the bottom here. Okay, that takes shape 1, 2. All right, 1, 2. You see a little micro divergence, and again, this is for tomorrow, but we will start to spot little formations like that I will show you tomorrow that tell us, oh, okay, this is no longer expanding in the extreme. This is actually stabilizing, and I better pay attention to that check back. We will bring in those little signs tomorrow that tell us when to really pay attention. That's how we know. Now, depending on where that comes in is, does it happen at the hop or does it happen at the terminal bar? Again, we can determine that by the condition of the indicator. Hey, Hassan, how are you? You're asking how the levels are close to each other in the PRZ, as this makes the zone stronger and will support my action. Meaning, when all the measurements come together in a tight range, is that more harmonic? Because this is a big 1618 decline, a little final divergence into the zone with great metrics in a tight area, really tight. Okay, and it should be responding at that 1618. That definitely helps. But the element of the indicator, triple indicators, the HSI check back, these little micro processes that are happening after the terminal bar completes will show themselves. They will show themselves to where you get that final retest drawdown. And again, you'll know that the support is strong based on what is happening down here. Do we have HSI? Do we have RSI BAM? Again, tomorrow we'll look at examples where you don't have it, and you'll see what happens. Again, we stay in a reaction mindset. Marcus, you're asking, I get that. I meant for the next 2 days. Oh yeah, Marcus, we're absolutely doing, again, like I said, most of what I do, NASDAQ, S&P futures, stocks, options, and the Bitcoin is just because it's been hot and we've been all over it. So we will get into that tomorrow, but yeah. I'm a gated, okay, great. What's the same here? What if this, let me go back here. Okay, yeah, I get that. You got it. What if for the same equity you have different patterns, different time frames that give you different targets? In different time frames, we'll talk about time frames in our management discussion, because we do want to consult the shorter time frame and the longer time frame. But here's something to think about. Again, I started our conversation, our discussion, that everything we need to assess just on this singular time frame is encompassed within the pattern. The execution zone, our exit zone, our target, and even our stop loss considerations with terminal bar, hop level. How much do we give this to go beyond the range that it's allowable? Again, that's management. We will talk about that in management. Like, how do we look at different patterns? But if you come back to the fact that everything we do starts with a mandatory reaction mindset, okay, because the reversals are going to come on the retest. The reversals will come with the overwhelming confirmation. You're going to develop your skills, though, treating everything like a reaction first. Once you can really ascertain what is a reaction, it gets a lot easier to hit those reversals. Again, execution and management we will get to in the next two sessions that I think are going to go take this discussion a long way. One or two more. And one of the stats, so Jeff is saying one of the stats he's tracking is when there's an HSI trigger and an HSI checkback. And you're seeing that the probabilities are massively better with both plus the checkback. Exactly. We need an indicator component, and I want to simplify it. Do you guys see icons on the screen after the terminal bar? Do we see any green stopping in our indicator slide here? If not, okay, you just expect a reaction. And we always expect reaction, but I can expect something more when I see those other variables. Again, identifying the icon. Where is the pattern? Where is the 618 drawn on the pattern? I think I was referring just to our B point, VJ. I was talking about when the M and W formations come together, that the B point is the critical. That was the breakthrough for everything for me. Once I was able to determine the B point, then I had an idea of what I was dealing with. And so once that idea of what I was dealing with got clearer with indicators, with price action assessment, then I know I could shoot gaps from one level to the next, because that's how the patterns really unfold, as many of you know. Again, that harmonicity principle, that B point level, it dictates where to target the move. It might go even well beyond that, but again, we're trying to establish minimums at all times. If we can establish our minimums from C to D and D to target 1 and target 1 back to PRZ, the picture gets clearer, and we look for the right, have the right expectations at the right place on the chart. Couple more, one or two more, we're going to wrap it up. Hey, Patricia, in an M formation, how would you describe the significance of the terminal bar being bearish or bullish? It's a great, really a great question, because it's more so when we see the continuation, because a lot of times we will get, especially like crab patterns, you will get aggressive price action into the zone, but it's what happens immediately thereafter. And we're going to look at that zone tomorrow, but do we get an inflection on a smaller time frame? Do we get any kind of counter trend behavior in the indicators? All right, because that is going to tell us if that bar is an exhaustion move, like we see a lot of times in a crab, or if it's simply going to be a situation where it's going to take 10 or 12 bars for the reversal to unfold rather than 3 or 5. Whenever those signs develop after the terminal bar appears, okay, in that level will give you the clue of how soon the reaction is going to go. Even on our indicator down here, and what we'll talk about in our third session, management, is how to look at these signals, these constructive signals out of the zone in the indicator that help to define what's going on here in the price. Critical stuff. Hey, VJ, I don't think I answered your question. Where is the 618 drawn from on that pattern? On this pattern? On this crab pattern? It's the B point. And we draw that from X to A. So if you're not aware of that, again, okay, good. Again, go back and take a look. Go to the gold members section, and if you guys want, review some of the videos. And here's what I want to send everyone home with. Really important. Get in the gold members section. Okay. What I want everyone to do is go there. If you have not downloaded the books, by all means, get to the books down here. Scroll down, download the books. You want to download volume 3, and you want to flip through that this weekend as well. We're going to do a lot of different strategies that come from that book, and even some new twists. The other thing is to watch some recent sessions and get with the software. So if anyone is not with their software, or you're not with the Harmonic Pattern Collection Lite version for TradingView, send me your username and I'll get you set up and activated. It's really important that everyone is set up with their Harmonic Pattern Collection program. Get HPC Lite and HPC Pro for Ninja, MetaTrader, Sierra, eSignal, whatever one you want. Definitely. That's because everything we do is based on the auto-generated patterns, and then just being able to act upon the signals that pop up after the zone completes. And that's what tomorrow's all about. So again, I'm going to stop there. Great session, everybody. I appreciate it. And again, guys, we're going to be doing a lot of stuff that is some of the most advanced material out there. And you all are a part of a very special history-making event. I can't stress it enough. Everyone knows how big harmonic patterns are, and you got a lot of people teaching it the wrong way. Okay, and it started really 20-something years ago with differentiating that B point. I'll tell you what, the stuff I'm going to show you in the next 2 sessions are going to be B point revelations. And you will all be so far ahead of anybody else, you'll be able to differentiate which patterns are going to work, and you're going to know in advance which ones are going to go and which aren't. I've demonstrated that over and over and over again, and now I'm going to show you what exactly I look at every day after the pattern completes that helps me make those decisions. So that's for today, folks. We'll see you tomorrow, 12 noon. We'll be back again. And Sunday, 12 noon. You have any questions, get with me, Harmonic Trader at Harmonic Trader. Otherwise, have a great afternoon trading, and we'll see you 12 noon. Go get them.